Kotak Mahindra Bank has posted quarterly earnings with a stable set of margins as well as improved asset quality. To talk about numbers, I have with me MD and CEO Mr. Vaswani. Welcome to ET Now. My first question to you will be to explain the degrowth in the quarterly profit per se that has degrown by 14%. What has been reason for that?
So Ankur, first of all, thank you for having me. Look, I think the fundamental issue really has been around the microfinance business. That is the business which has, over the years, delivered very good results for us. In this particular 2 quarters, quarter 3 and quarter 4, it's obviously been very difficult. As you know, that this is an industry-wide issue, and the losses have obviously kind of overwhelmed really well. And the good news is during the quarter, we got a technology embargo, so that lets us go. And then we've got exciting plans as we go ahead.
You talked about embargo. I was about to ask that only. Now that problem is away from you. What is your plan for FY26? How will it help and what is your target now?
Yeah, so sure. Look, the whole idea was we utilized the time when we were under embargo not only just to fix the basics around resilience, capacity planning, and all that kind of good stuff, but we rethought the entire go-to-market strategy from a digital perspective. And coming out of the embargo, we've launched the new mobile banking app for the Kotak customer, as well as new apps for the 811 customer. Both these apps are being very well taken up by customers. And, you know, they're unique to that particular customer segment. So we can make it really, really targeted, which is what, you know, has been my mantra: customer segmentation, customer focus, and how you build proposition for that customer. And that is what we're going to continue to go. So whether it is 811, the mobile app, whether it is platforms for our corporate customers, which we've invested in so that we can get much better payment solutions, whether it is in Kotak Securities with our new app and how customer can do much more, or investments for our average banking customers on our Cherry app, we're going very strongly ahead with our technology efforts.
You have maintained that you plan to grow 1.5 to 2 times of nominal GDP growth. If you talk about the loan growth, going ahead in this financial year, will you continue with that plan? That means the growth which is there this year, can we see slightly better or there will be some pressure?
So see, Ankur, this is more of a risk appetite statement. If you are growing very aggressively beyond, call it 2.5 times normal GDP growth, you're obviously taking additional risk. I've always told you, I'm here not for a day in the sun or a quarter in the sun. My goal is to build a sustainable franchise which our customers are very proud of. That requires me to do it with prudence and not take any shortcuts. So what we're saying is, from a prudent statement and not taking on too much risk, we believe 1.5 to 2 times nominal GDP growth is a good thing. Now, there may be certain circumstances, like we come across a particular acquisition, or, you know, there's some areas which we have never done before, which we want to go into, which will grow. But the guiding principle is 1.5 to 2 times. Exceptional circumstances may apply.
And similarly for deposit growth, how do you assess this fiscal year?
So last fiscal year, at least the first 3 quarters was tough because market liquidity was tough, and you saw the entire banking system kind of struggle with deposit growth. Q4 became much easier. Into this fiscal year, we are seeing liquidity easing by the RBI, which obviously bodes well. I think repo rates are going to have a pretty significant impact. But then the capital markets and what really happens on the capital market side. As you could have seen last year, the first half, capital markets were doing exceptionally well. So everybody was kind of channeling their savings into the capital markets. How capital markets behave out into this fiscal year is to be seen.
Talking on margins front, surprisingly, you have improved while other banks are struggling. I want to understand, do you want to come closer to 5% mark? Or do you think this is sustainable considering the environment where the rate trajectory looks on a downward side?
So, see, it's clear that the RBI is going to make more rate cuts. There's no question about that. The question is how many rate cuts and when. Okay. Now, depending on the rate cuts, obviously that can puts pressure. There's only that much that you can pass through on pricing. So what we are trying to do is balance the levers, some amount of it through pricing, and make sure that we get the pricing right, and two, then manage other levels of cost that we can kind of manage through. So depending on how much the rate cut is, when it is, how it kind of happens, what the market reaction is, how much we are able to pass through, we would like to try and say that, we keep in the ballpark, maybe slightly lower if there are too many rate cuts, but try and manage the business through that kind of cycle.
But any ballpark figure where you're looking, any range if you can guide?
It's very hard now, Ankur, because suppose it gets cut by 50 basis points, what do I tell you? In the event it does not get cut, then obviously we'll be in this kind of ballpark, right?
But there is a pressure on cost of funds. Even in this quarter, it has gone up. How do you think you will navigate through that challenge? So
that's our entire deposit strategy. CASA is a very important part of our strategy. And as I was kind of talking about, right, for every different customer segment, 811, which is core India, giving us very good granular kind of deposit growth. Last year, we couldn't grow our 811 book. This year we could. So I'm hoping to get growth there. With our solitaire proposition, I'm hoping to get good growth there. SME and our consolidated liability asset proposition, I'm hoping to get growth there. And on the corporate side, with custody and additional investments in technology, on the payment side, I'm hoping to get kind of growth there. So CASA is obviously something that we're extremely focused on and will try and grow.
On ROA and ROE front, should shareholders expect that this is going to be a better year?
So a lot depends on how obviously the credit costs play out, but clearly we are very focused on improving ROA. ROE is a completely different thing, particularly in our context. In our context, as you know, our capital, our CET ratios are actually quite high. And every year, the amount of capital we generate is actually in excess of the capital we consume. So we are in a very happy position of building a very fortress-like balance sheet, a really fortress balance sheet. That fortress balance sheet allows us to take advantage of opportunities as they arise or absorb downturns in times of difficulty. So I think the ROA story and the ROE story are two quite different things.
What about capital raising this year? Do you think it will be required?
Not at all. At a 22% capital ratio, absolutely no need for us to raise any capital.
One last question before I let you go. Looking at the wicket microfinance side, you said there are challenges, but if you look at RBI embargo, now that is behind you. How do you explain your situation in growth front? Do you think it will be better pitch to bat on now?
Oh, definitely. Because see, the internal constraints, technology was only a Kotak issue, not an industry issue, behind us. Unsecured loans kind of thing, behind us. Microfinance, like I said, our book was about 10,000 crores down to 4,500 crores, right? The pain will definitely reduce just because the book size will be much, much, much lower. So those problems are definitely behind us. I expect to see nice kind of growth. Having said that, in a business like ours, you've got to constantly look out and keep a very close monitoring of the radar as to what's happening. The US tariffs, for example, what implications does it have, right? Does the SME customer get affected? What happens, on a geopolitical front? There's so many other factors. What happens with repo rates, right? So there's so many other factors, and no business is on autopilot. Our business is clearly not on autopilot, and we've got to guide the business. The most important thing is that we've got a North Star. We will continuously plow towards that North Star. Yes, there will be things that will come along which we'll have to kind of deal with. We'll deal with it, but the North Star is defined and we'll keep at it.
All right. Thank you so much.